Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, June 24th, 2010. This morning we're talking about moderate growth ahead. Now, yesterday's FOMC meeting came and went as expected, with Chairman Bernanke not moving on interest rates. All right, but he did acknowledge that the pace of growth is going to be moderate going forward, and that was backing off from last meeting's stance that recovery was accelerating. All right, Bernanke cited the European debt crisis as conditions as not being supportive of growth, and he left the extended language there in his statement. So that basically takes a rate hike here in the U.S. off the table for 2010, unless something miraculously turns around. I don't think we're going to see this happen. So, in addition to the FOMC news, we had U.S. new home sales come out yesterday at 10 a.m. This was after the blog, and sure enough, as expected. And like the previous day's data, home sales were off 33%, just tanked, showing that the housing market's really not getting better. It's probably getting worse. Meanwhile, this has encouraged some focus to be put back on to Greece and the debt crisis over in Europe. Now, their cost to insure Greek debt, otherwise known as CDS, credit default swaps, has gone up to the highest levels that it's ever been. So this was even higher than at the height of the crisis, when they weren't even sure if Greece was going to make it through or default or not. So, I don't know what's happened to have changed that sentiment, but then again, I don't work on the inside of some of these European banks, so I don't know what's going on. But a lot of times where there's smoke, there's fire, so just be careful. So what we're seeing is risk aversion this morning. We've got Japanese yen strength, and we also have Swiss franc strength. I don't talk about the Swiss franc a lot, but I want to start taking a look at it. The Swiss had been intervening in their currency because they wanted to try and keep it low versus the euro, and as people started just abandoning the euro, there was just no way that the Swiss National Bank, the SNB, could continue to intervene, so they've just got to sort of deal with it. So it looks like the Swiss franc's been getting a bid and been going higher. Now, overnight in New Zealand, they came out with their GDP figures, and they were in line, showing a gain of 0.6%. Now, that met analyst expectations, but I think the market was expecting a little bit more, as it really pushed the Kiwi yesterday. So this is showing growth for the fourth month in a row, but the Kiwi is lower this morning because we're seeing risk aversion, and also the fact that they may have pushed it a little bit too far yesterday. So I'm just taking a quick look here at the Kiwi dollar. You can see it's a nice big candle there, had a pretty nice move. Let's drop down a little bit to the, I don't know, let's look at it in the 2 hour maybe. And you can just see what happened on the 2 hour. Boom, just a big move yesterday, higher, and there's a little shooting star. I don't know if we have technical traders here with us, but for those of you who do, that's a good reversal candle there. So the news came in good for New Zealand. The rate hikes are probably going to occur in the next meeting in July, but we're going to have to see what happens with the world economy if that's going to happen. So it's down a little bit, but that's what we're seeing. Also wanted to show you the Aussie real quick. Look at it in the 2 hour. Overnight they had a political coup, and where the Prime Minister Rudd, he stepped down because he was losing support of his colleagues. Now, Julia Gillard, I believe that's how you pronounce her name, she became Australia's first female Prime Minister. All right, and I guess that's a historic step there in Australia. But Rudd lost his confidence of his colleagues over the proposed mining tax that he wanted to impose on the mining companies. They just wanted to put a 40% across the board sort of profits tax on mining companies, and that was seen as anti-business. The mining companies are cash cows for Australia, so not necessarily what they wanted to do. Just taking a quick look at Euro USD. Euro's sort of bouncing around in this range here. As you can see, we've got the Greek debt crisis happening, but there's no specific news tied to Europe that should be making this happen. We've also got pound dollar, pounds higher, as you can see, just touched 150 earlier. It looks like it's going to be coming back that way. We're at the point now where people are trying to decide, hey, in the currency market, where do I want to put my money? I mean, they're saying in the U.S. the data's looking bad. They're only going to have moderate growth. Places like Australia, Canada and the Kiwi, they're considered these risk assets. So if there's risk out there, I don't necessarily want to be in there. Europe's shot, we know that. So the pound's starting to see some bids in there and some money pouring into it because they may have the best opportunity to both combat their growth and to see, to combat their deficit and to see growth. So that's what we're seeing. We're going to look at here quickly. Dollar yen, 2-hour chart. Wow, look at that. That's just looks like it's been on a 4-day decline there. Now the yen, obviously, it's stronger on risk aversion, but Japanese stocks were lower last night because of the potential for exports to slow due to Europe. And then when we look at the dollar, we say that we're just it's a little bit higher versus some things, but it's just not the beauty prize winner. This morning, jobless claims came in a little bit lower, but they're still not good at all. Durable goods orders, they rose ex transportation, but overall they shrank. But they shrank less than expected, so maybe that's a positive for the market. I mean, I don't know if you call shrinking economic data positive as long as it beats expectations, but right now we've just got bad economic policies in this country. There's just no other way to say it, and it looks like now that we've taken away these stopgap measures like these housing credits and things of that nature, that we're going to slide into economic stagflation, similar to what Japan saw over the last 10 years or so. So unfortunately for the world, the U.S. still rules the roost. And what I mean by that is that, the actions, the stuff, economic recovery that occurs here in the U.S. is going to affect the globe worldwide. And if recovery is not happening here, that's going to be a major detriment to global recovery. Now, we started the financial crisis, if you think about it, and now we're prolonging it. I mean, first it was bad behavior of our banks, and now it's bad policy coming out of Washington, D.C. All right? Slowly we're sliding into the economic abyss, and all we have is politicians running around trying to get the next vote. So we've got banks that have been bailed out. Their executives have paid themselves humongous bonuses, and then they sit on the money and they don't lend it out for fear that regulatory and other economic factors are going to make it a losing proposition. Or maybe it's because they can't lend, because they have too many toxic assets still on the books, and they're afraid that the next move is going to be towards deflation, all right? And that's going to put even more home owners underwater. And what are we getting out of Washington for solutions to these crises? Well, how about the housing tax credit? Let's give everybody $8,000 to go out and buy a house. Okay, that sounded nice for a time, but you know what? It just was reported that over 14,000 people took advantage of that. Didn't actually buy homes, but bilked the government out of some $25 million. On that list was 240 death row inmates. Those are people who are never going to get out of jail, okay? And yet they're claiming a tax credit. Now that's government efficiency at its finest, if you will. And, when you think about it, well, it's only $25 million. What's the big deal? I mean, we're already trillions of dollars in the hole, and we just keep on spending. I mean, it's just insane. But, the mantra here in the U.S. has now become, hey, at least we're not the euro. So maybe instead of "in God we trust," we should have Treasury put that on the dollar bill. So that's it for my rant today on what's happening. Keep your eyes on some of the stronger currencies like the Swissy and the pound and the yen, and stay away from dollar and the risk assets. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.